Welcome to the channel of Rugged Capitalist. James Dimon is an American billionaire businessman and banker who has been the chairman and chief executive officer of JPMorgan Chase, the largest of the big four American banks, since 2005. Dimon was previously on the board of directors of the Federal Reserve Bank of New York. James Dimon was born on March 13, 1956. And it's age 66 years, New York, United States. Net worth, $1.5 billion US, 2022. Welcome to the channel of your advisor and share world information with you. Rugged Capitalist. Please subscribe, like, share, and comment, and hit the bell icon button for more, new, and quick notifications. The economy has faced a whirlwind of recent pressures contributing to investment uncertainty and steep falls in the stock market. The market losses at the hand of factors like inflation, the conflict in Russia and Ukraine, and rising interest rates have prompted predictions as to what exactly comes next for the global economy as these opposing factors reach their boiling point. JPMorgan Chase CEO, Jamie Dimon, shared a frank warning that you better brace yourself for an economic hurricane. The Federal Reserve is shedding nearly $9 trillion in bond holdings and is looking to enact another interest rate rise at their meeting in June. JP Morgan is bracing ourselves, and we're going to be very conservative with our balance sheet, Dimon said. On the same day, Dimon said the economic storm is right out there down the road coming our way. Star strategist Marko Kalanovic, who was ranked the #1 equity-linked strategist in last year's Institutional Investor Survey, said the U.S. stock market is poised for a gradual recovery in 2022 and the S&P 500 index will likely end the year unchanged, in part, given our view that there will be no recession given supports from U.S. consumers. Less than a week later, chief economist Bruce Kasman told Bloomberg Television that the strength of household and corporate finances would keep the economy buoyant. "We don't see a financial storm coming right now," Kasman said. "We think the economy is going to avoid recession as we go through the rest of this year." Differences of opinion on things like the economy and markets within firms are nothing new. But this high-profile episode at JP Morgan is a reflection of these unprecedented times, with little consensus about what lay ahead. As a result, market volatility will probably remain elevated as forecasts will likely change often in reaction to incoming data that has been hard to accurately forecast. Dimon argues that while the current economic landscape isn't as threatening as the conditions that led to the Great Recession, there is certainly an inevitable whirlwind that may lead to unfavorable outcomes for the larger economy. Related, ways to protect your business from inflation. Right now it's kind of sunny, things are doing fine. Everyone thinks the Fed can handle this, Dimon said at a Bernstein conference. That hurricane is right out there down the road coming our way. Dimon went on to stress that, like any unpredictable natural disaster, it's a matter of impact and scale, factors that are difficult to estimate, but the important thing is to prepare for the storm regardless. Why is the stock market down? Along with the catalysts like inflation, rising interest rates, and the Fed being in a bind, Dimon stated that the conflict in Russia and Ukraine may be one of the biggest risks to the global economy. Wars go bad. They go south. They have unintended consequences, Dimon said, and added that the conflict will contribute to ongoing spikes in commodity costs. The ongoing economic pressures are further exacerbated by the overseas conflict, prompting investors to steer away from riskier stocks, contributing to much of the recent crypto and digital currency drops. When will the stock market recover? Despite Dimon's stern prediction of an inevitable economic storm, JP Morgan's Marko Kalanovic believes quite the opposite and predicts an upward turn in 2022. According to Kalanovic, the stock market might actually erase all of its losses by the end of the year and finish flat, completely bypassing a recession as consumer spending remains solid. What causes a stock market crash? A stock market crash is caused by two things: a dramatic drop in stock prices and panic. Here's how it works. Stocks are small shares of a company, and investors who buy them make a profit when the value of their stock goes up. The value and the price of those stocks are based on how well investors believe the company will do. So, if they think the company they're invested in is headed for hard times, they sell that stock in an attempt to get out before the value drops. The reality is, panic has just as big of a role in a stock market crash as the actual economic issues that cause it. Let's walk through an example from the coronavirus pandemic that shows you just how powerful panic is. As news of the virus spread, grocery and convenience stores all across the world sold out of toilet paper in a matter of days. Was there a toilet paper shortage? Well, yes and no. There wasn't a shortage before people started panicking. But when people lost their minds and started stocking up on toilet paper, their actions created a shortage. The same kind of panic can trigger a stock market crash. Once investors see other investors selling off their stocks, they get pretty nervous. Then, stock values start to dip, and more investors sell their shares. Next thing you know, everyone is dumping their stocks, and the market is in a full-fledged crash. Look out below. Our point here is this: the stock market's value is 100% based on perception and prediction of the future. No wonder it feels like such a roller coaster ride. Different people have distinct thinking and have the right to give their opinion. Please subscribe, like, share, and comment on our channel Rugged Capitalist. Today advice. You need patience, discipline, and the ability to take losses and adversity without going crazy. Thank you for watching.